Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, June the 12th. The year's 2024. Let's talk trading. Trading with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And as always, make sure your risk management is in place so you don't lose more than you're willing to lose on any one single trade. Walmart, big news. Did you make the big bucks?
I made a lot of money. Yeah, it was what had happened was I had gone into a trade, and I figured the market was going to go up, and the reason why was because when you looked at the M30 and you looked at the hourly, what you saw was a very compressed market at the time. The daily range was somewhere around 34 pips for the range for the day. Meanwhile, at that point in time in the day, it should have been at about 60. So it was very, very compressed. In addition to that, what I was starting to see was that there weren't very big moves in the upward direction, but what you were getting was you're getting higher highs and higher lows, and that's an indication the market's wanting to go up. I got a flip-flop box. I took the flip-flop box and was in a trade for about 10 minutes prior to the core CPI news coming out, and which is red news. I totally forgot about it, to be honest with y'all. You know, being fully transparent. You know, mainly I guess because CPI does. You know, yeah, it's red news, but it doesn't really ever move the market. You know, or it moves it, but it moves it 10, 15, maybe 20 pips, and that's it. It's not like it's not NFP, okay? And but in any case, I was in the trade, and as I suspected, you know. Oh, and one other piece of reason why I thought this was going to go in the upward direction is because we had put in a pretty solid bottom at the bottom of this, and so there was structure in place for all you structure traders. So that structure thing was there, and so I went into the trade, and next thing you know, it popped, and it popped big. I believe, I don't have that old screen open anymore, but I believe I got 72 pips on the trade by the time it was done. Could have gotten more. Let me see where I could have gotten out. Hold on one second, ladies and gentlemen. I could have actually picked up 97 pips if I had held out to the top of it. But it's okay. I didn't. I got the vast majority of it, and that's as they like to say, the lion's share. But it's one of those things where it was one sense it was a mistake because I really didn't pay attention to the news, but at the same time it was I saw the news earlier in the day and before I started the trade, and I just kind of ignored it only because of the fact that it was core CPI, and like I said, it doesn't move the market by 50, 60, 70 pips. It'll move it 10, 15 pips, maybe 20 on a big day. And I wasn't worried about it. And it wasn't something that really went on my radar because of that. Plus I figured, okay, I got structure below me supporting me. As I said, higher highs, higher lows. That indicates it wants to go up. I'm getting a flip-flop box in the upward direction. It was just everything was going my direction, and it just made sense. Now, I know you had, prior to getting on the call, you had said, or onto the video, you said that you had gone short at 52. What was your rationale for going in at that point?
Oh, I figured it was going to come back down. Literally. It was right. It was like, hey, this thing's going up. It's going up. It needs to come back down. It's basically.
It's got to breathe. Yeah, it's got to breathe.
Well, we've got that big return bar, and it's just a matter of whether or not, how long it takes to get there, and at least that's the way I'm analyzing it.
Yeah, it's the type of thing where I'm looking at it right now where, I like to shoot for the midpoint of the big bar. So if you look at the M30, the midpoint would bring you down to like 2809, something like that. It was 2810, you round it off. That would be for me, that would be the point where I start to say, if this thing, continues to move down, that would be the point where I go and say, hey, okay, let's seriously consider getting out here. That'd be a pickup of a bunch of pips.
Right.
Or like 30 or 40 pips, I guess, 40 pips for you.
Yeah.
But that's the way I look at things. But at the same time, so many times though, if you're willing to wait it out, go through that midpoint and go up and down, up and down, up and down, and wander and wiggle and everything else. They're going to try to get you to jump out, right? And then it'll go all the way back down to the open of that big M30 candle. But right now we're sitting here. We had a flip flop box to go back up. I would not have taken it. Just doesn't look right to me. I don't know why. It just doesn't look right to me. Probably because I'm maybe a little bit biased like you are, that this thing going to want to go down to that midpoint. Maybe that's what's causing it. Additionally, if you look to the left, you're looking at the 1 minute chart, right at 45 there, there's kind of a line there, which from the flip-flop box means you could have made two pips or so. So it's not bad little jump up and hit and run, but at the same time, it's just doesn't look good to me. I just wouldn't take that trade.
Right.
And it never right now. My prediction looks like a good prediction because it's putting a nice little candle in here.
Yeah, like I said, I just saw the opportunity. Looked like an opportunity to me. And actually, I think I looked at a weekly chart and I saw that it had come up to like about 56, and so it was doing one of those top scraping things. It didn't break. Let's see, what is this level here? It would have to come all the way up to like 129. And then the next level was 128.47, somewhere around there. So I just thought, this looks like a good place to take a short.
Yep, I would agree with you. It just makes sense, and especially if you look at that weekly chart. Yeah, it kind of makes sense because it's again, I like saying it puts in a little shelf, or it puts in this range up there that it's just a barrier. Now, I'm not saying that it can't go and break through it. Yeah, obviously it did. It did break through it back, in July of last year, but that was a long time ago.
Yeah, and I'm looking at a daily, and if you look at the highest daily open over let's see, this is back in March, and that was right at that 52, 53 level there. So, like I said, to me, it just looked like, hey, on news, a lot of times it'll, take a run up, and then it'll come right back down to that open.
Yeah, we'll spike through it, and it just, as we like to go and say, if you're a statistician, you go and say it's an outlier point. Right. Yeah, did it happen? Yeah, absolutely, it happened. No question about it. But, to really look at the data properly, you usually take those outlying points and you throw them away, because that's not really what the market's actually doing. And so it's funny, though, because outlying points also can be very useful from another perspective, and that is that sometimes becomes, if the market runs away from it, and then it starts to build and then want to go back up in the other direction, it's a goal that the market wants to get back to that point. Sometimes it does, sometimes it doesn't, but what it does for me as a trader is that that's where the market wants to get to. I don't know if it's going to make it there or not, let me go and pick a point below that level to go, and if I get into the trade and I can take some profit below that, is there enough room for me to take take a profit below that level? And I'll go and set my TP somewhere around there and just try to pick up those pips and points and whatever scraps that are left for me. And I don't have to be on that bleeding edge of the knife, of trying to get through that, because when it gets to that level, it's a fight, it's a bull bear fight. And the thing is, you don't want to be between the bulls and the bears in the fight, because if we as minuscule little retail traders, we're going to get squished.
Yeah. Oh, and another reason why I shorted at that level, got a new H4 candle, and it actually this is my second trade, because I'd already shorted once and picked up, I don't know, 10 pips or whatever, I think. So this was I just figured that this H4 was going to be red, come back down and try and hit the maybe take this H4 pivot for this hour at 128.20. So that's kind of what I'm targeting.
Okay, that makes sense. So yeah, I'd agree with that. That H4 is just, if you put up an H4 chart and you go back all the way back, at least on what I'm looking at, going as far back is somewhere in the beginning of May of this year. That H4 candle is by far the biggest candle out there.
Yeah.
And so it's type of thing where you get the biggest candle, in a long time. I'm stretching this out even further. I can't find it going all the way back to the beginning of May. I can't find a candle bigger than it. And so when you get a candle like that stands out like that, that also tells you, okay, we probably bit off more than we can chew here. We need to digest this. And what I mean by that is what's happening is, this is a story I tell myself. Whether it's true or not, I don't know. But the story I tell myself is, for that market to move up that far and that short of a period of time, because H4, it's a 4-hour block of time. That's not a lot of time, in the scheme of things. It's not really a lot of time. But for it to move up that far, there were a lot of traders that got left behind, meaning they were short, and they were short somewhere, let's say, set at 27.38, 39, 20, 27.40, somewhere around there, they were short. And now we're sitting up here at, 28.50 or something, okay? And people are just going to say, I need this market to go back down so that I don't take as big of a loss. And so how do people do that? Well, us as retailers, we really don't have anything we can do. Okay, so don't even think you're going to be able to do something that's going to go and cause the market to go down. But if you're sitting out there, and you're Deutsche Bank, or if you're the Bank of England, or or you're the Fed even, and you've got a real horse in the game, you've got the millions and millions and hundreds of millions of dollars to dump into a market to go and force it to go in another direction.
Yeah. I was going to say something. I just spotted something here on my dashboard. The pound yen's above 200.
Yes, I saw that earlier.
It's happened a couple of times, but I'm thinking this might be one of those shorts you could put on and walk away with 500 pips in a week or so.
Yeah. Yep. Yeah. It's but then you have to look at the market this way and start, assessing things that could potentially happen.
Yeah, and
it helps you with your bias.
Yeah, and we're out of time. Oh man, what a day. Once again, the fastest 15 minutes in trading is just about up. So, fellow traders, looks like there's some nice trades out there on the horizon, and that happens every day, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.